video, we're going to go through 3 ultra high yielding ETFs that have been paying investors a significant amount of income consistently since inception. Now, even though all 3 of these dividend paying ETFs offer massive starting yields and offer a massive amount of income potential, every single one of these ETFs have a positive total return, so at least as of this point are not to be considered yield traps. We're also going to go through and I'm going to show you the math on how easy it could be potentially to earn an extra $100 per month with every single one of these ETFs. So if you're an investor looking for some high quality income generation and want it ASAP, make sure to stick around, drop a link down below, and let's get right into the first ETF. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first high income generating ETF that could offer a potential easy $100 per month and is paying investors a ton of income ongoingly is one of the most popular ones as of recently. We're talking about XDTE, or the S&P 1 day till expiration covered call style ETF. Now this is a round till ETF, and it says right here in the overview, the round till S&P 500 1 day till expiration covered call ETF, or XDTE, is the first ETF to utilize 0 days to expiry options on the S&P 500, and it seeks to provide overnight exposure to the S&P 500 and generates income each morning by selling out of the money 1 day till expiration calls on the index. This is an actively managed ETF. Now the ETF's distribution rate, as you can see right here, your eyes are not tricking you, 34.88%. So like I said, at least so far since inception, this ETF is paying investors a ton. And what's even better than that? Why XDTE? It says weekly distributions. Yes, not monthly, not quarterly, weekly. XDTE seeks to pay weekly distributions out of sold options premium. Income potential. XDTE seeks to generate income through the cover call strategy on the S&P 500 and harnesses volatility. This ETF sells 1 day till expiration options on the S&P 500 and seeks to exploit structural market misplacings. Now the expense ratio on this one is going to be pricey at 0.95%, and the AUM is growing like crazy, but it's still relatively new. So as of right now, it has only 67 million in AUM. Now the launch date was only since March, so we don't have all that much time to go off of as far as historical performance, but like I said, at least so far, so good. But what you're probably interested in is how much is this ETF actually paid in distributions so far? Remember, this one pays distributions weekly. We're talking 20 cents per week, 12 cents per week, 2 cents per week, 19 cents per week. So it's going to be sort of all over the place because, again, it depends on what happens in that time frame in the markets. But either way, it's kind of a consistent around 15, 18, maybe 20 cents on average distribution. And this is weekly, remember. Now, just some back of the napkin math. If this ETF is paying investors on average around 80 cents per share that they own per month as far as distributions go, this means an investor would only need to purchase around 125 shares of XDTE, theoretically at least, to earn an extra $100 per month, which is crazy. Now, realize that this ETF only costs around $52 per share, so it's $6,500 in order to earn $100 in distributions per month, which is wild. But I promised you I'm not going to share with you yield traps, at least not as of yet. So XDTE, for example, since inception has returned around 23.6% in an annualized gain, or around 10.86% total return, and this is with $10,000 and reinvesting the dividends along the way. Now, even if you weren't to have reinvested those dividends, still 10% total return or 22% annualized gain. So I think it's fair to say, at least as of now, XDTE basically makes the cut, and this ETF could be a good one to look into for some massive income generation. And speaking of massive income generation, the next ETF that could be a great option for an investor to make an extra $100 per month very easily is one of my favorites, one of my larger holdings in my portfolio, at least as of recently, SVOL, or the Simplified Volatility Premium ETF. Now it says right here, in case you guys are new to this one, the Simplified Volatility Premium ETF, or SVOL, seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse performance of the CBOE Volatility Index, or the VIX Short Index. Now, the cool thing about SVOL is that it sort of has a target of around 30 cents more or less as far as distributions total per month. So regardless on what happens with the volatility index within that month, the actively managed fund is most likely going to pay you around 30 cents distributions total, or at least that's what we've seen more or less since inception. Now, even though SVOL has around a 1.16% gross expense ratio, yes, that is pricey. You are going to pay a pretty penny for the actively managed ETF. It has 1.2+ billion in assets under management. This ETF has been exploding as of recently. And for good reason, because an investor would only need around 333 shares of SVOL in order to earn a potential $100 per month in distributions, which is massive, And keep in mind, SVOL is only around $22 per share, so an investor will need to spend around $7,000 in order to earn $100 extra per month ongoingly with a consistent 30-cent dividend per share at least since inception. But it's not just that. Since inception at least, SVOL has had a total return of around 41.18%, or on average around 11.08%. This is over 3.28 years with a $10,000 investment and dividends reinvested. Now again, not all that long, 3.28 years, but a decent time frame to go off of nonetheless. And in this time frame, we have seen some massive volatility, so SVOL definitely checks out in my book, which is why seriously I've been buying this one like crazy. Now, last but not least, another good option for income generation, potentially at least, and an ETF that could pay investors a ton as far as distributions go and help them earn an extra $100 per month very, very easily, is QDTE Innovation 100 1 day till expiration cover call strategy ETF. Now, this is another round till ETF. It says right here, the round till innovation 100 1 day till expiration cover call strategy ETF is the first to utilize 0 days to expiry and seeks to do the same thing basically as XDTE does. Now, the only difference between this one and XDTE, of course, is QDTE utilizes the NASDAQ. And at least so far, looking at these weekly distributions from this one, this ETF is paid anywhere from 36 cents on a weekly basis down to around 9 cents and upwards to as high as 56 cents more or less on a weekly basis. But if we were to average things out, this ETF has paid investors just at first glance around 35 cents, maybe 40 cents weekly, which is insanity. Now, let's say this ETF pays an investor around $1.20 per share per month on average. And again, this is going to change depending on how things trade in the markets and how the actively managed fund deals with ongoing market conditions. But if that were the case, we're talking 83 shares of QDTE is all an investor would need potentially in order to earn an extra $100 per month, which is insanity. That means an investor would only need to invest around $3,500 in this ETF, more or less, in order to earn an extra $100 per month, which is nuts. And at least since inception, which again is not all that long, these newer ETFs definitely need some more stress testing before we can say yes or no if they're good or not, of course, in my opinion. But at least since the last 0.46 years, QDTE has had a total return of around 8.19% or an annualized gain of around 17.7%. Now, with dividends not being reinvested, around a 7 or 16%, either way, not bad whatsoever. Now, I will say with a lot of these newer ETFs, like I mentioned earlier, it's really going to be a testament to see how they trade over the next year, and especially if there is any big market dips, it's going to be important to see how the fund reacts. But that being said, some of these newer ETFs that have these interesting strategies that are seeking to generate investors a ton more income potential are super fun to look into, and I'm personally watching them very closely and also investing in them on top of that. So now that we talked about 3 different positive total return, ultra high yielding ETFs that could offer an investor an easy extra $100 per month ongoingly, I want to lastly hear from you guys down below. As far as the ultra high yielding game, what is one ETF that you think is definitely worth looking into and could easily offer an investor an extra $100 per month on an ongoing basis? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.